Welcome to the Liquidity Detective. This video is for educational purposes only and does not constitute financial advice. Past performance is not indicative of future results. All trades shown are real, but your results may differ. Now, most trading strategies start with one question. Here's mine. Most trading strategies start with one question. Where is price going next? I don't know, and my framework doesn't require me to know. Instead, I build a position that can respond to whichever direction the market actually takes. What I can do is identify where value exists, where liquidity has accumulated, and where ownership is changing hands, then have a plan for deploying and protecting my capital. That's the basis of my entire framework. There are four connected pillars: pre-buy process, execution, market mechanics, and mindset. Each one solves a different problem. The first tells me where I want to participate, the second controls how I deploy capital, the third explains what I'm watching, and the fourth keeps me disciplined when the market doesn't behave as expected. The first pillar is the pre-buy process, building the map before I put meaningful capital into the market. I don't start by asking where should I buy. I start with, is this business actually valuable? I'm looking for companies trading at or below book value, with stable earnings and strong balance sheets. Then I look for liquidity areas where a lot of buying and selling has already taken place. Then absorption, selling keeps coming into an area, but buyers continue taking that supply. From that, I map my high-interest zones, so when I enter, I'm working from a predefined area, not reacting to a candle. The second pillar is execution, where the plan becomes actual capital deployment. My first entry is a deliberate 5% probe. It isn't me saying this is the bottom, it's a small commitment that lets me participate without deploying most of my planned capital immediately. If price expands lower, the ladder is planned before the trade, not invented while price is falling. The same applies on the way back up. I have resistance zones mapped before the trade, and that's where I take planned profits. Execution isn't about being right about the next candle, it's about controlling how my capital enters and exits the position. The third pillar is market mechanics, probably the biggest shift in how I think about markets. I don't think of price as the thing I'm trading, I think about ownership changing hands. Every trade transfers shares from one participant to another, and I'm interested in what happens when a lot of that transfer happens around the same area. Markets can revisit those areas, because they can remain important while inventory is still being transferred. That's why I don't treat support and resistance as permanent lines. I treat them as adaptive areas that can change as ownership changes. Once enough ownership has transferred, price can expand either direction. I don't need to know which one beforehand, I need a plan for both. The fourth pillar is mindset, and it isn't something I add after building the strategy. It's part of the strategy. You can have a good plan and still undermine it by changing the rules halfway through. Mindset shows up in what I do once the trade starts moving. If my planned target is reached, I take the profit. I don't need to capture the whole move. If price keeps going without me, I don't chase it. And if price moves against me, I don't invent a new strategy because I'm uncomfortable. The entry, ladder, and capital allocation were already planned. I accept that I don't know which direction comes next. My job isn't to be certain, it's to be prepared. There's one final layer underneath all four pillars. What happens to my capital while I'm waiting? Capital tied up in one position has a cost, so I think about four risks. Capital risk: can I continue if price moves lower? Time risk: how long is my capital tied up? Return risk: is the potential return worth that commitment? And opportunity risk: could that capital be doing something better elsewhere? Because managing a trade isn't just managing price, it's managing capital. So that's the framework. Value identifies the opportunity. Liquidity helps identify when the opportunity is becoming active. Execution manages the capital. Mindset gives me the discipline to follow the plan. I can't control the market. I can't control which direction price expands. But I can control my mindset, my plan, and my risk. I don't predict, I navigate. Every trade I post on this channel runs through this exact framework: the pre-buy process, the execution, the market mechanics, and the mindset behind it. If you want to see this framework applied to real market situations, subscribe. That's what we'll do in the next videos.